RSI, best indicator for intraday trading? Well, if you use it correctly, it can be very, very powerful. The problem is most people use it exactly wrong, upside down, and that's why you get upside down results in your profits. So let's get you making some money, and here we go. So when I talk about people using it upside down, here's what I mean. A lot of people plot RSI, and then they put the infamous overbought and oversold line. So when price goes up, they'll say, okay, it gets overbought here at 70. These are typical levels, and oversold at 30. And then you get your midline at 50. And so the thought process, which is 180 degrees wrong, is that, oh, when the indicator gets above 70, then we should go short, because it's what? Overbought. But as you can see in this chart, the indicator gets above 70 here, and it keeps going up and up and up and up. And so, bet you big golly wow, what would have happened if you actually bought this when it got into the so-called and misnamed overbought zone? Bought it, not sold it. Again, most people say, oh, you should short it because it's overbought. And let's face it, that term itself kind of implies to our subconscious mind that we should sell because it's overbought. That term should never be used in trading, especially with an indicator like the RSI, which has an artificial ceiling and an artificial floor. Artificial ceiling is 100, artificial floor is 0. So it can't go above those. It's a bounded indicator, and therefore there's no such thing as overbought and oversold when it comes to this indicator, the RSI. So actually you would have done better to buy here. Now, why is that? Well, the relative strength index is what RSI stands for. It is referred to as a momentum indicator, and what it's actually measuring is the speed and the magnitude of a stock, futures, cryptos, whatever, recent price changes. When the indicator goes up, that's telling us that price action is moving up with, well, speed and magnitude. Do you want to short a market that has bullish speed and magnitude? And I hope the self-evident answer to that is no, you do not, right? You want to be bullish. In top-down trading, we have a saying. We say always and only trade in the direction of the dominant energy of the market. So the RSI here in this case is sharing with you that the dominant energy of the market is up. And now let's go to another thing that a lot of people use in their trading with the RSI, which is, again, horrible. Let's switch over to, actually, we can keep going. You know what? I don't even need to switch charts. And it has to do with divergences. Everybody in their parakeet loves themselves some divergences. So we've got a higher high on price, a lower high on RSI. And people think, oh, that's fantastic. That's when you go short. So maybe you can stay long here, but when you get a divergence, higher high on price, lower high on RSI, that's when you short. And again, remember, everybody knows that technique or that theory, and everybody's losing money. So if you do what everybody does, you're going to get what everybody gets, which is what? Losses. So, well, let's move forward here, and let's see what did happen, actually. Price goes in and makes up another higher high. No bueno for the amateur traders who said, oh, okay, I got a higher high on price, I got a lower high on RSI, therefore I'm going to go short, owie, but the market didn't go down, and if they put their stops up here, they got stopped out. And then what are they going to do? They're going to blame, the market makers took out my stops, or the specialists, or the big money, or my brokers trading against me. Of course, it's always not their fault. It is your fault if you don't understand the indicator and you're just trading lines instead of understanding the energy of money flow that it's measuring. You may say, well, okay, but isn't the money flow shifting to the downside when we've got a higher price? But the speed and the magnitude is shifting on the RSI? And the answer is almost makes sense, except for one problem. That can be very, very temporary. We are still above the zero line. And just because you get a minor shift, you do get a minor shift in the speed and magnitude of the market, that does not mean that that is going to be a trend reversal. In other words, it doesn't mean it's going to be a long-term directional change. We haven't even gotten back to the mid-range of the indicator. Maybe that's a good way to help explain it. We haven't even gotten back to the mid-range of the mathematical calculation of the speed and the magnitude of this market's price action. So it has not gone down dramatically. It has just been a very short-term shift. What? 1, 2, 3, 4, about 4 bars. That's it. 4 bars, and then back up we go. Okay, and then you go up here, and then again. Now look, it comes down even less after the divergence. It doesn't even come down as much. It's got 1, 2, 3. These bars basically roughly kind of going sideways. When to enter can be very, very tricky, because if you enter in the direction of the market, but you get in at the wrong time. So let's say, for example, that we got in, we said, okay, well, the dominant energy is up, so I'm going to buy here at this time. See, time is down here at our x-axis, but that's not a good time, all right? So we wanted to buy, well, actually, it was way back here when you'd want to buy. So timing your entries is absolutely critical. You put together 2 elements, and W.D. Gann, the famous trader, was known for this. He said all of trading comes down to the confluence of time and price. The y-axis, price, the x-axis, time. You cannot trade one or the other. You must put both together to have a system. Get in at the right time, at the right price, and today we're talking about price a little bit, but we're talking about the strength of the price. So I want to also give you my timing indicator, which you can get absolutely free. Just go to indicatorwebinar.com. That's about a 45-minute free tutorial. Again, it's absolutely free. And I share with you the indicator. You can load it up on TradingView or pretty much any trading platform, actually. And in that tutorial, again, because I want you to understand what you're trading, I teach you how to trade it. I teach you the energy behind it, the money flow behind it, the patterns to look on that indicator, and, well, I just teach you everything that you need to know about how to time your entries. So go get it, indicatorwebinar.com. I give that to my viewers for free, and you're a viewer. Also, encourage you to subscribe to the channel. If you have any comments, leave them down below. I cherish your comments.